It's good to have some cash on hand. You want to have some cash on hand. I would hope any financial advisor that you talk to is going to recommend a 3 to 6 month emergency fund. First step is going to be use something like Mint, or you need a budget to track your spending. That way you'll know roughly how much you spend every month and you can back into your emergency savings goal that way. I started tracking on Mint. I spend $4,000 a month. Perfect. Okay, so I need, anywhere between 12 and 24,000 set aside in cash as an emergency savings goal. It's going to depend on, your situation. If you're dual income and you have no kids and your house is paid off, maybe 3 months is totally fine for you. You don't have a ton of risk. But if you have a family and one parent is a stay-at-home parent, it's probably better for you to have 6 months, maybe even a year. So we really talk with people about, well, hey, let's talk about that worst case scenario and what would you feel comfortable having? At first, it seems a little shocking. You hear, wow, 24,000 in cash. Like, man, I've heard like I should be investing that money, but if you were to lose your job, you'd be really thankful that you had that there. And once you have the emergency fund set aside, then you can start looking at investing the excess, right? And you'll feel really good having that cash. It'll protect your investments. When you're ready to take that step past the emergency fund, you can set up what's called a brokerage account. It's just a simple investment account, not specific to retirement. Put your money in a total market index fund like we talked about before. Make sure it's got the low expense ratio and you'll have basically exposure to the entire market.